Hey guys, Amanda Kendall here. So last week, if you caught my live video, we went over 4 cash flow drivers in your business and the order in which they need to go through in your business in order for you to actually prioritize them and make sure that you're utilizing cash flow to your advantage. So I promised you on those a little bit more in detail. So today we are going over driver number 1, which is, drumroll please, taxes. I don't do drum rolls. There we go. So driver number 1 is taxes. So whether you are a sole proprietor, whether you're an S corporation, whatever the status is, you need to be planning for taxes off your pay. So you need to really take a look at these things and make sure that when you are figuring out what to use your cash flow for, that taxes is numero uno on that list. Number 1, priority, no wavering from that. It has to happen as number 1. What amount to set aside for this when you're doing it? So that is the big question. Now, I need to preface what I'm about to tell you is not a guarantee. I'm not telling you if you set aside this much that you're going to be safe and you're not going to owe more, you're not going to overpay. I'm simply telling you this is a safe estimate. Professional to get a better estimate. If you have a tax professional and you're working with them, I suggest you take my percentage and you just set it to the side and you talk to them and you figure out what your actual percentage is. So our driver number 1 is our taxes. So here in the state of Colorado, we have federal and state taxes. Some other ones, you don't have state income tax, so you only have to worry about federal. Some states, like New York and Ohio, you have not only federal and state, but you also have local taxes that you have to account for. So when I am giving percentages on a state side today, I need to be very clear that I am only giving this percentage based on Colorado state income tax rates. And if you live in a different state, this is going to vary based on your state income tax rate. And so I don't want you to take this state number I'm about to give you and assume that it's for nationwide every state. Federal, the number I'm going to give you is a rough estimate based on my experience. And so this number, again, could be way high for you, it could be way low for you. But here is my recommendation. When you are setting aside 30%, 30%, that is what you need to set aside for taxes unless you have a tax professional that has told you different. 30% accounts for roughly 25% to the federal. Colorado state is right at 4.1% buffer. So for every $100 you have coming into your business, $30 of that should be getting set aside into a savings account for taxes that are paid quarterly. Your quarterly tax due dates are going to be April 15th, June 15th, September 15th, and then January 15th of the following year, all for 2019. Oh crap, I haven't paid April and now June's here. That's fine. June is due here in a couple weeks on June 15th. Make sure you pay that one. Know that you then have until September for your next one to be due, but you really need to plan on over the rest of this year setting aside that extra little bit so not things you want to fall behind on. I work with a lot of clients who are behind on their taxes, and it does not make it any easier to stay caught up when you're catching up back due as well. So you want to make sure that if you haven't paid your April one, that you're paying that one moving forward. But again, this is driver number 1 for cash flow in your business. When you have cash in the positive in your business, the very first thing you should be doing and using it for is your taxes. Now, because I do realize that as I said that may have came out wrong. Taxes should not be an afterthought that you only pay if you have cash. They need to be a priority. So for every $100 or whatever your tax professional has advised you to set aside. Again, I'll say this a couple more times probably, do not take my advice and count it as gold, because this is just a very general percentage. This is going to change for people based on their income. This is going to change for people based on their filing status, based on dependents they have, based on other things they have going on in their tax number. But my suggestion for Colorado residents is 30% unless you've been told different. So that is our driver number 1 for what we use cash flow for. So driver number 2, we will dive more into depth on next Friday for our Finance Friday video. So if you have any questions on this, drop them in the fabulous weekend, and I will see you guys on here next week.